Hello everyone and welcome. Today I'm joined by Niki Willacott, National New Build Business Development Manager at the Principality. And we're talking about an exciting new proposition that Principality have just brought to the market. So Niki, let's get straight into it. Tell me about the new exciting proposition that Principality have just brought to the market.
Right, so delighted to sort of let everybody know that we are now entering shared ownership in England for the very first time ever. And we're also going to be extending our proposition in Wales to all local authorities and housing associations. So great news.
Absolutely fantastic. Fantastic news for our housing associations, housing providers, and of course, those looking to get on the property ladder or move home using shared ownership. So why now?
Well, as a mutual building society, we strongly support customers getting onto the property ladder, especially first-time buyers. First-time buyers is part of our Better Homes strategy. We also have signed up to the UK and Welsh Government strategies as well for affordable housing. So by launching shared ownership, it seems the right time because it certainly will be helping those first-time buyers.
Okay, fantastic, brilliant. I want to now come on to a little bit more now about the product, its USPs, and what sort of loan to value are we going to be looking at?
Okay, so loan to value will be 95%. The minimum share that they'll be able to buy is 25%. Maximum will be 75%.
Okay.
As well, our USPs for new builds, shared ownership would be new build. We've got an 8-month offer with an option to extend it for a further 8 months, all on the same interest rate.
Okay, fantastic. And I've heard something around the service charge piece.
Yeah, so service charge, we don't include a service charge from an affordability point of view, so that will certainly help as well in this time.
I think it will, and I think there'll be a lot of brokers watching this really liking the sound of that element. So as you're aware, and we're seeing in the market at the moment, unfortunately, we're increasing impaired credit customers. Where's Principality going to sit in this space?
Yeah, we appreciate that customers have had blips in their credit history, certainly in the last couple of years. So as far as our impaired policy is concerned, we'll consider applicants that have got up to £500 for CCJs and defaults in the last 6 years, whether they're satisfied or not. And from a payment point of view, we'll consider up to status 2 in the last 2 years. Obviously, they need to be up to date now, but those payments can be on loans, secured or not, or even their mortgage payments. They obviously need to pass our credit score, but the great news is our credit score is the same across the board, so it doesn't change via LTV, so it can help people as well that have got minimal credit history.
Okay, brilliant, brilliant. So in terms of the share, I know you've mentioned already minimum purchase share at 25%, that's correct?
That's correct, yeah.
Okay, brilliant. Where are we going to sit around staircasing?
Okay, so staircasing, the average person will staircase at 10%. You can also staircase at 1% as well. Due to the costs and the fees, the 1% staircasing is normally done via a cash payment and not done on the mortgage. So to make sure that we haven't left anybody out, we are offering a minimum staircasing of 5%.
Okay, brilliant, fantastic. Well, thank you, Niki, and that draws to close part 1.